Good morning. This is Cindy Presgraves with Cindy's Realty Group, and I hope that everybody had an amazing spring break. I am back fully, full time again. I know it's been a few days. I tried to do my videos every day, but it was a little bit complicated. I had to spend a little bit of time on the beach too and get this beautiful suntan. Ta-da! All right, so today I want to talk to you about four major reasons households in forbearance won't lose their house to foreclosures. I know a lot of people have been lately waiting like, hey, foreclosure, foreclosure. Yes. When can we find a foreclosure? Where can we find a foreclosure? When is the market going to crash? All right, bad news for you guys. It's not going to happen. Um, so I do want to tell you there has been a lot of discussion as to what will happen once the 2.3 million households currently in forbearance no longer have protection of the program? Keep in mind, there's a lot of people that have equity in this, and that's going to save them too. There's different options. So let me explain to you a little bit more what's going on here. Some assume there could potentially be millions of foreclosures ready to hit the market. You're wrong. However, there are four reasons this won't happen. Keep in mind, this is not 2008. 2008. Oh gosh. So the first one is almost 50% leave forbearance already cut up in payments. So a lot of people have already cut up with those payments. They don't want to lose their house. Plus, there's a lot of equity in those houses. All right. According to the Mortgage Bankers Association data, through March 28th, this is last month, a few weeks ago, 2 weeks ago. So show that 48.9% of homeowners who have already left the program were current under mortgage payments when they exited. So 6% of the made their monthly payments during the forbearance period, which is awesome. 7% brought past due payments current, which is another option. And 6% paid off their loan in full. So what is this telling you? It's not going to happen. All right, this doesn't mean that the over 2 million still in the plan will exit exactly the same time. It does. However, it gives us some insight into the possibilities. All right. The number two one is the banks don't want the houses back. They don't want to deal with that. Oh gosh, can you imagine this again? All right, let's see. So banks have learned lessons from the crash of 2008. This is one of the reasons. Listen to me clearly on this. So lending institutions don't want the headaches of managing foreclosed properties. This time, they're working with homeowners to help them stay in their homes. They don't want to deal what they dealt in 2008 with us. So this is really important for you guys to understand and know this. So as an example, about 50% of all mortgages are backed by the Federal Housing Finance Agency, the known as the FHFA. In 2008, the FHFA offered 208,000 homeowners some of the home retention action. What does this mean? So, which are options offered to a borrower who has the financial ability to enter a workout option and wants to stay in their home. Home retention options include temporary forbearances, repayment plans, loan modifications, or partial loan deferrals. So these help delinquent borrowers to stay in their homes. Over the past year, the FHFA has offered that same protection to over 1 million homeowners. All right, today, almost all lending institutions are working with their borrowers. The report from the MBA reveals that those homeowners who have left forbearance, 5%, have worked out a repayment plan with their lender. 5% were granted a loan deferral where a borrower does not have to pay the lender interest or principal on a loan for an agreed period of time, and 9% were given a loan modification. Number three, there is no political will to foreclose on these households. All right, so the government also seems determined not to let individuals or families lose their homes. Boomerang, wait, Bloomberg, oh gosh, recently reported mortgage companies could face penalties if they don't take steps to prevent a deluge of foreclosures that threatens to hit the housing market later this year. So a U.S. regulator said the Consumer Financial Protection Bureau, the CFPB warning is tied to forbearance relief that allows millions of borrowers to delay their mortgage payments due to the pandemic. What is this telling you? All right, so mortgage services should start reaching out to affected homeowners now to advise them on ways that they can modify their loans. So this way they're actually, probably some of them they're being called, some of them they're having letters in the mail. So it's basically talking to your bank institution if you're going through forbearance, or there's different options. If you want to sell your house, you don't want to sell your house, talk to your lender or talk to your financial institution. So the CFPB is proposing a new set of guidelines to ensure people will be able to retain their homes. Here are the major points in the proposal. So we're still in number 3. I just want to let you know on that. So the proposed new rule, number 1, the proposed new rule would provide a special pre-foreclosure review period that would generally prohibit servicers from starting foreclosure until after December 31st, 2021. It's still a possibility, but they're trying to help you guys out. The second one is the proposed rule would permit servicers to offer certain streamlined loan modification options to borrowers with COVID-19 related hardships based on the evaluation of an incomplete application. Number 2. Number 3, the proposed rule wants temporary changes to certain required servicer communications to make sure borrowers receive key information about their options about the appropriate time. That's number 3. All right, so the final decision is yet to be made. And some do question whether the CFPB has the power to delay foreclosures. So the entire report can be found in protections for borrowers affected by the COVID-19 emergency under the Real Estate Settlement Procedures Act, Regulation X. So number 4, if all fails, homeowners will sell their homes before foreclosure. So there's still the possibility. Look, if anything, none of these are an option for you. You can still sell your home. You can still get money because there's equity. So right now, homeowners have a record levels of equity today. This is not 2008, and I'm repeating myself. I've been repeating myself for a while now. I hope that you share this and you understand where I'm coming from. So according to the latest CoreLogic home equity report, the average equity of mortgages homes is currently $204,000. In addition, 38% of homes do not have a mortgage. So the level of equity available to today's market homeowners is significant. So what is that telling you? You're not going to lose your house. If you're going through a issue, situation, hardship situation, please contact me. I want to help you. So just like the banks, homeowners learned a lesson from the housing crash too. In the same way, the grandparents and great-grandparents were shaped by the Great Depression. Much of the public today remembers the 2006 mortgage meltdown and the foreclosures, unemployment, and bank failures it created. No one with any sense wants to repeat that experience, and it may explain why so much real estate equity remains in mortgage-free. So this is why people are actually saying, hey, it's not going to happen. Let's help you out. So what does that mean to the forbearance situation according to Black Knight? Just 1 in 10 homeowners in forbearance has less than 10% equity in their home. Typically, the minimum necessarily to be able to sell through traditional real estate channels to avoid foreclosure. So the reports of massive foreclosures about to come to the market are highly exaggerated. This is not true. Please educate yourself. Find the proper information. I'm telling you, it's not going to crash. So as E.V. Selman, Chief Executive Officer of Selman Associates with roughly 30 years of experience covering housing and housing-related industry, recently proclaimed, the likelihood of us having a foreclosure crisis again is 0%. So stay informed, educate yourself, save this video, share this video, and please comment below. And I look forward to hearing your comments and sharing this video and talking to you soon. So this is Cindy Presgraves with Cindy's Realty Group by EXP. Have a wonderful day.